Welcome. You've clicked yourself onto Three Guys and an iPad, the only mortgage-focused podcast with a show title under 15 words. Or maybe that's conferences. Anyways, I'm Brian Rieger. I am the co-founder of Content Beacon and one of those three aforementioned Three Guys. I'm joined as always by my friend and partner and co-founder at Content Beacon, Rick Grant. Rick, how the hell are you?
I'm doing great. Glad to see our guest on the show again. It's been too long.
Another friend of the show, and we'll bring her up in a moment. We're very excited to have her. But before we do that, let's also mention our longtime friend and the third guy, although first in our hearts. He's from Austin, Texas. He's a 45-year mortgage origination vet. You'll want to know that he's also a longtime former president of Respro, and he's a certified mortgage banker, which is no little deal. Let us all welcome Kevin Breeland. Kevin, how are you doing today?
I'm doing great, Brian. I might have to have you come with me every time I go someplace so you can introduce me ahead of time.
I can bring theme music too. Just give me a little notice, okay? So
that'll work.
On that note, well, we're going to
anything from Ozzy Osbourne. I'm up for.
Okay, we're in. We can do that. I think we can do that. Maybe Rick can work some of that into the show on the edit part too. So, but right now, this is the part where we make our shameless plug for Content Beacon. It's really the only content marketing agency that's B2B in the industry. So if you're a wholesale lender looking to reach brokers, warehouse lenders looking for correspondents, select lenders looking for realtors, just give us a call or shoot us a note. Also, if you'd like to be a guest on Three Guys, or you know someone you really wish we would have on, or even just a topic, just contact us. I'm sure on our YouTube channel, the contact information is there, and it wouldn't hurt if someone other than my mother had a thumbs up there. So please like us as well. With that, and without further ado, we have another friend of the show. I believe, Loretta, this is your third or fourth time on, but let me introduce you. You are. This is Loretta Salzano. Exactly. Well, we did take a couple years off, so everybody's refreshed now, I guess. So this is Loretta Salzano. She's a founding partner with Franzine and Salzano. And Loretta, you tell us that the firm is now 27 years old. Congratulations.
That's like me. Go figure.
Nice. I wouldn't have guessed you were that old and good. So,
I know. I mean, after hearing Kevin 45 years, I'm like a newbie. I have practiced much longer than that, but it was 27 years ago that I founded the firm after being in-house.
Well, congratulations. That is no small accomplishment. And of course, Loretta's here today to join us. We'll be doing a roundtable topic on a pretty hot topic, especially for the title industry, but lenders will want to stick around and listen to this too. So Loretta, I'll start with you. The title industry is under attack once again. We're sometimes considered the weak link in the real estate transaction. So we're hearing things like junk fees. We're hearing about pilot waiver programs, same-day mortgages that waive title. What's going on here? Why is the title industry suddenly in a not so wonderful light?
Right. I wish I could say it is suddenly, but to your point, I don't think this is anything new. It's something that comes and goes in waves, and the focus is often very different. I remember many moons ago, shortly after we started the firm, when the title industry was under attack for attorney closings. And we, in fact, got a call from the Department of Justice then with a threat that we shouldn't advise our clients that were doing Georgia closings, that an attorney had to close those transactions despite a law to the contrary. So then we saw some criticism of the title industry and reinsurance through HUD actions and state actions many moons ago. And then this iteration seems to be related to questioning the value of title insurance. I think part of the concern or the criticisms are aimed at two aspects of title insurance generally that really don't have to do with the value of the policy and certainly the strength of the providers who back up those policies. And I think one of the criticisms is that the premiums are too high, and the reason there are two faces to that, or two elements of that. One is they think that the agent splits are too high, And title insurance premium agent splits are perhaps higher than in other types of insurance. And then the other criticism is that oftentimes the loss in a title insurance claim isn't a total loss, or the loss can be remedied, or the damage can be remedied relatively expeditiously and affordably through a title curative document or maybe even a lawsuit. But it misses a boat that if something goes sideways, it's going to go sideways. And not only will the lender, of course, have the risk of loss of the collateral that secures their loan, but think about homeowners that have saved their whole life, and because of something back in the chain of title, they could lose their entire investment in life savings. So I think it's paramount. It's certainly not a junk fee. It's these two concerns of the Biden administration and the ongoing concern we've seen with the CFPB related to junk fees, and coupled with the FHFA and Fannie, reaching out to lenders, exploring this years ago, and now implementing loan programs that allow for attorney opinion letters or waivers of title insurance. That risk is going to have to go somewhere, and it's getting lumped in with the junk fee thing, which is completely ridiculous. They're two completely separate issues. Title insurance premiums aren't junk fees. It's a real premium paid for a real risk in an intensely regulated industry where claims are in fact paid and paid frequently. And just because they don't always result in a total loss doesn't invalidate the value of insurance. Junk fees, our industry is receiving a lot of criticism. We're sort of the second shoe to drop. I think the small loan lenders got it first, and now the mortgage industry is getting it about junk fees. And I think it's preposterous to call an origination fee or other fees that lenders charge junk fees. I mean, there are costs to produce a loan. I think the most recent number I saw is like $12,000. Kevin, you might know that better than I. It's crazy. I think when I started in the business, it was half that, and as the compliance costs rise, so do the origination costs. And if it's not in the fees, it's going to be in the rate. It's not like people can give loans away for free. And certainly, if their collateral is in question because of the lack of title insurance as a permissible charge for loans that are sold in the secondary market, you can rest assured those rates are just going to go higher.
Interesting. So I take it you are in the camp of, however large that is, that it's not a junk fee. So I want to follow up, and then Kevin, I want to come back to you as well. There's word out there that the Consumer Financial Protection Bureau, the CFPB, is now looking for more transparency in the loan estimate and the closing disclosure, which were originally mandated, as I recall, by a CFPB rule called TRID. I can hear my lender clients and friends shuddering already with just the mention of the word TRID. What's going on here? They want to undo their own rule?
Yeah, that I think, again, preposterous is a good word that comes to mind. There was so much consumer testing on the disclosures and so much industry input. And think about the cost of implementation. So I think it's crazy to think there needs to be more transparency now. That, as I recall, when the rule was proposed, and we had a few rounds, and RESPA reform before TRID in the form of reform of the GFE, and back in the day when we had GFEs for most transactions in the HUD-1. And there was a lot of talk about showing the split between the title insurance underwriter and the title insurance agent. And that kind of went by the wayside. And, those splits aren't necessary in hazard insurance or in other fees that are listed on the settlement service or on the loan estimate and the closing disclosure. And when you think about the loan estimate, the idea is it's supposed to be a shopping tool so applicants can determine the best deal for them based on the service and the product they need. So what's the difference? As far as I'm concerned, like a lot of these things aren't negotiable. If the loan's going to cost you $3,000, let's just see the loan cost you $3,000 or $10,000, whatever the number is. I don't think consumers care about that minutia. It's very few people that are going to have the wherewithal or the ability to go in and negotiate particular fees. And Kevin, I'd love to hear your thoughts on this too. As someone who has a lot of friends in the industry, I know when I would get those back in the day, and I never do it anymore since I've had my own law firm. I would ask a friend, would you close this for me for free? Or would you, what can you do to help me out here, or a lender? But generally, consumers just care about the all-in price. Most consumers just care about the monthly payment. So, to revisit that and all the effort and all the costs to the industry when their own testing proved that that was the best solution at the time. And shoot, it hadn't changed for, I don't know, 40 years before that. So, for them to challenge the rule that their own agency promulgated, I think is, or even to suggest that it's ineffective, is interesting to me.
Well, that's very interesting, Loretta, and I'm going to come back to you in a moment. I want to bring in Kevin Breeland now, who has the unique advantage of having spent time in the title industry with the Respro organization, and he's been with a number of large and small mortgage lenders. He is a certified mortgage banker. Kevin, what are your early thoughts on this entire push against the title industry?
Well, I think one of the issues that the title industry has always had, and is the general public just really does not understand exactly what the role of title insurance is and what role they play. And I know that as a lender, one of the things that I deal with is, especially on refinances, when you're having to get a new title policy on the same property that the same people owned, and that in their mind nothing has happened since they bought the property, so why do I need a new title policy? So and in some of these areas of the country where property appreciation was elevating at a rapid rate, and you could do multiple refinances in a year, and you could find ways to show it as in the borrower's best interest, these title policy costs could run up into tens of thousands of dollars over the course of the lifetime that the owner owned that house. So I think that's problem number one. Problem number two, and is a problem that I don't really know how it's ever going to be answered, but I'm sure Loretta recalls this. Back in time when we had Aaron Toll come to Respro and do some roundtables and discussions, and was a featured speaker. And one of the things that she always talked about when she kind of had her march on the title industry was the amount of claims that were paid as opposed to the premiums that were received, and that the title industry had approximately about a 5% claim activity, as opposed to the closest insurance to that was 66%. So I think that was the second problem. And while claims might have gone up over time, they still enjoy a relatively low claim margin, even though, as Loretta said, that claim margin is going to be dictated because they were able to negotiate a lower cost, or everybody was able to come to an agreement ahead of time that didn't require a complete payout on the policy. So those are unique factors to the title insurance industry that you typically don't see in health insurance claims, in auto insurance claims, in life insurance claims, all of these types of other claims that can occur. So that's problem number one.
Well, and if I could interject for just a minute, you're right. Like title agents, part of their value is everything they do to make sure the title is clear. So even though you're paying the insurance for the premium, it's not like, when you get homeowners insurance, somebody comes out and seals up your roof and makes sure that, there aren't any trees that are going to fall on your house. So, there are all these preventative and prophylactic and claims management things that happen before the policy is even written.
And one of the items that was also talked about, especially among independent title insurance agencies, was the cost to maintain their plants, to do these title searches, and the time to maintain a title plant and cost isn't just the facility itself and the records. It's also the people that go in there and look these items up, and they go from one record to the next record to the next record, and this is a very time consuming process, but it's also expensive to store all of this information and to have it on hand. Now, obviously, with cloud and the internet, some of these plants have become more automated, so it makes it a little easier and a little bit less time consuming. But I can assure you, an independent agent that lives in some southern small town in South Dakota probably does not have their title plant completely automated, because they might be handling 15 counties, because the entire population of that area might be 45,000 people. So while technology is great, it doesn't reach out everywhere. And technology is very slow to catch on in areas where they've been doing it the same way for 75 years, and we're going to continue to do it the same way. And I personally experienced this when our family sold some property, and we used a very small title agency in a very small town, and literally everything was done by typewriter and fax machine. I didn't even know that anybody operated that way anymore. I mean, it was just amazing.
Kevin, that's the other thing, is that CFPB is basically talking to consumers when they're talking about all these junk fees and everything. And consumers think, well, title insurance is like any other insurance. But you just pointed out that it's not at all. It's not like auto or health insurance where they can look at tables and tables full of data, actuarial data, to find out what their rate should be. This is unique and distinct to every property and borrower. And so it's a whole different kind of insurance.
Yeah, and obviously been in the mortgage business for 45 years. I don't like the term junk fees at all, because while I think the vast majority of companies that operate and have fee schedules it's for services rendered. And, RESPA prohibits the marking up of fees and things of that nature. So, I think when people spout out the word junk fees, they're usually academia people who have never run a business a day in their life and don't really understand the processes that, what it takes to have employees. It's not just hiring the employee, it's office staff, and it's equipment, and it's benefits. And even in the smallest of companies, you have to deal with all these things. But I'd like to switch gears here a little bit and go to the closing disclosure and LE. I was on the SBREFA panel for the closing disclosure that we use today with the CFPB. And I can tell you, as Loretta mentioned,
God bless you.
There were a lot of very in-depth conversations about what this was going to look like and how this was going to turn out. And there was a lot of very good information given. Richard Horn was actually involved in that SBREFA panel, as well as some other CFPB people at that time, who probably have all gone into private practice now. That was a well thought out, with like Loretta said, lots and lots of consumer feedback. I'm not sure really what you would change that would make any more sense to the transparency. Breaking down who gets paid what in commissions, from a title policy seems like a total waste of time and one more level of confusion. But the other thing, and the most important thing, is that the disruption to what the consumer has already become accustomed to understanding. And I don't have customers ask me when I go over a loan estimate or a closing disclosure, what does this mean? They understand it as well as they can understand it for the 1 or 2 or 3 purchases of a home that they'll make in their lifetime. And that's it. The question I would ask you is, how many times have you gone to an auto dealership, bought a car and got it financed and was going through the papers and had no idea what you were looking at? All right. I mean, this is not an uncommon problem for consumers, but the closing disclosure does outline all the costs. It tells you exactly what they are if you just read it and ask.
And
That's
you
all
have
you
to
gotta
get
do.
it before the closing, which was really the big thing,
Three,
right? That was the
3
biggest-
days before the closing.
Exactly. So it's not, so you have plenty of time.
And if you do decide to make a major change, that could delay the closing another 3 days, so you can make that change and then see how you like that. So the consumer has, as I tell all my buyers whenever they're really nervous, nothing you're doing in this process commits you to anything until you sign the closing documents on the day of closing. Up until that point, you can walk away at any time. So,
And ironically enough, and it sounds like the roundtable agrees that title insurance is not a junk fee. Ironically, if TRID was meant to address, we said TRID was attempted to help the consumer do a little shopping. If the first question the consumer asks is, "What's my monthly payment?" will we agree that the second one is, "When do I get my keys?" So I'll let everyone ponder that. But let's go ahead and move.
Let me interject and just say, like, when it comes to TRID, and maybe you see this, Kevin, and title insurance together, it's been a big hot topic about how title insurance premiums are disclosed in the loan estimates, because you can't disclose the simultaneous issuance rate. So in many states, it's whatever. Let's say the premium's $2,500 that you're paying for the lender, that there's a simultaneous issuance rate. So it might be just $100 to get the owner's policy. And that policy does not end with the loan. That policy remains with you until you sell the home.
as long as you own that property.
Or even as long as you have a warranty, given a warranty deed. So it's it's not like it expires or you have to pay premiums more than once. So, that's another thing. It's not the same kind of insurance. So, I think if the CFPB wanted to do something to make a better disclosure, they would disclose the simultaneous issuance rates, because that's what's meaningful to the consumer. That's really what it's going to cost them out of pocket. And I get that it's confusing depending on the state, but that's just my 2 cents worth unsolicited on that issue.
I don't disagree with that, because it is the buyer's choice if they want that, and it protects them. And you're right, in some states that premium is as low as $100. I mean, it's a very inexpensive cost for really a lifetime of protection, as long as you own that property. And so it's something that should be disclosed. It should be, it should be universal in all states, really, because that does give the consumer solid protection, and they need to know that they're getting something out of this title insurance process as well. But as you have mentioned, the title insurance is moving that title forward to the next buyer to make sure there's no hidden errors, there's no past claims, all of that. All you have to do is be involved in a property with past claims, or you're trying to clear out the heirship, and you're more than willing to pay whatever it's going to take in title insurance to be covered and insured so you can sell this property. We're doing that right now, and I will tell you that it is an unbelievable expense to clear out errors that haven't been addressed for over 100 years.
Well, on that note, it sounds like there's a lot of agreement here as to the value of title insurance. So I'm going to throw this out as kind of a wild card. What can title professionals do right now to I don't want to say to fight back, but to kind of change that perception out there that they're just kind of an unnecessary middleman?
Well, Alta's doing a very good job of showing the protections of title insurance, but maybe that's part of the thing, is to tell the horror stories. It's telling horror stories that led to fair lending laws. We could do the flip side, right? The horror stories of when someone doesn't have title insurance, and when a consumer doesn't have title insurance, what can go wrong. And also having folks understand everything the title agent does and everything the title industry does to maintain, as Kevin points out, good solid records to make sure that when people buy homes, they are in fact getting those homes. They're doing all of these things in advance of closing to make sure that that the home buyer is getting what they expect to get. And nobody cares what the lender's getting. I know that's not the story to tell, but certainly, it doesn't take much. With some title claims, it can be a boundary dispute. It can be someone coming out of the woodwork. And we just don't hear about those things. There are also protections from insured with insured closing protection letters. So maybe title has to do a better job of educating the public about the value and not just the difference between what the policy protections are, but it's telling the scary stories, I think, that gets people to say, oh no, I would never want that to happen.
Easement issues, road easement issues,
Sure.
all of those are spelled out in your title policy as well. It tells you where they are. And, when people don't understand that, they see somebody show up with a backhoe and start digging up their side yard. It creates a lot of stress.
Well, that's one thing I wanted to jump in there, Brian, is Loretta, you hit it right on the head. This is where a lot of people are going to make a mistake here. A lot of big companies, a lot of trade groups, they're going to think that this is a problem for the lobbyists to go back to the CFPB or back to the government and try to change their minds. We have to remember that the government is talking to consumers now and trying to make it look like they are helping them. Now it's for the industry to say, look, what they're trying to do is not going to help. And the TRID story is a perfect example. We have a million stories of unintended consequences, but a story that's that perfect doesn't come along very often, where they made the new rule and now they're finding out it doesn't work very well, right? Well, the industry needs to do the same thing here with title insurance, talk directly to consumers and their realtor and real estate agent partners and explain to them, as you said, Loretta, the horror stories.
It's sad to say. And, it might be the case that, this is an area where there will be some fee shifting. Many settlement agents make most of their money from the title insurance premium split and not the closing fees. If there's too much criticism or for some reason the licensing schemes and the regulatory schemes in the states change that, or they somehow cap splits or regulate them differently, then that's not going to help with consumer costs. People have to charge what they need to charge to generate loans to close transactions. So you might have a smaller split to the title agent, but that's going to be made up for somewhere else.
Well, we have to admit we're in a period of dramatic change as it is, and it sounds like it won't just be limited to the realty space. As the other PR and marketing guy on the round table, I'm going to jump in on what Rick said. Communication is the key, and I think we've all maybe bought or sold homes where we had a great title agent and you knew what was happening, when it was happening, and whether it was an email or the use of some other technology. And those were the ones where at least you felt something was moving. But I'll tell you, I helped sell my mother's house a few years ago, and we had a title agent picked for us who did not answer a single email. In fact, I didn't even realize the house had closed until a week afterwards. And those are the kinds of folks who, where I could see why consumers say, yeah, that's a junk fee, and again, it's as simple as communicating with the folks that you're in contact with. Let them know what's going on. Let them know what you've done for them. It's not just a dead period between the sales agreement and the closing. So Alta had a great campaign a few years back to go to the consumer. I believe they've already started doing some things as well, but it's going to take all of us, agents, underwriters and the like, to make sure people, start to understand what the industry does. So with that, I'm going to ask the impossible question of the round table, and I'm going to ask you, look in your crystal balls. Where does this general topic go in the next 5 years? Was it just an election year talking point? Do we see some? I know, Loretta, you mentioned fee shifting, but where will this issue be if we sit down and talk about it in 5 years?
Kevin, are you going to go first?
Yeah, I'll go first. I think we'll still be talking about it in 5 years. I don't know that there'll be any great shifts one way or the other. The thing that I go back to when the CFPB starts poking around in title insurance and things of that nature, the one thing that we all need to keep in mind is that there are many, many representatives and senators in Washington who are attorneys who own title companies, and that's kind of how they got their step into the political arenas. So there's probably more knowledge of how this works on Capitol Hill than other topics, but I think this has more of the election year bar rattling than it does anything's going to actually come out of it.
Other
Yeah.
thoughts? Oh, go ahead, Loretta, please.
No, I hope so. I think so too. And there's so many layers of regulation in the title insurance space that, not that couldn't be undone through the sweep of the congressional pen, but I just don't think that's likely to happen, or that the splits will necessarily change. I suppose, we're seeing in the RESPA space the issue of wholesale lenders back. What's old is new again. We haven't seen the brokers' compensation get much attention since 2001. And now we have, the FDIC brandishing their sword. We have the UWM case that's been filed. So there's attention to the necessity to value the broker's compensation. And it's possible, I suppose, the CFPB would go back and revisit what title agents have to do to earn their commission, or somehow try through some process to adjust their premiums, or some other way to demonstrate what they have to do, especially since those policy statements are from the 90s, when technology has been a game changer in most places. So, it's possible something will happen there. But, I remember being on a task force when I was in-house counsel years ago through NHEMA, the National Home Equity Mortgage Association, I think it was. And all the different trade associations were all trying to work on reforming the truth in lending disclosures and the RESPA disclosures and combining them together. And we couldn't even agree within certain industry specific groups. And it took, 30 years to happen. So I can't imagine reopening that can of worms with the disclosures. And I think there's just too much going on with all the different state laws that would have to happen, absent some huge sweeping change like we saw with NAR. Maybe someone will get excited about that and try to find a way to shoehorn some kind of a UDAP case or make an aggressive argument. So, never say never, but if anything, I think that's how it would have to happen. Because I'm with Kevin. I just don't think it's going to happen through congressional effort.
No, and I think the other thing that we have to keep in mind is that change comes with a lot of focus on a particular problem, and that change can take years to transpire. TRID took years. I mean, literally years of people talking about we need to change this, we change that. I mean, we were having talks in 2005 about changing the HUD settlement statement. I mean, there's just all kinds of things that goes on to create transparency. But the fact of the matter is that it's just not easy to stop a runaway train. I mean, that's just what it comes down to. It's just hard to stop. And I think that regulators and industry, we get to doing things a certain way, and then maybe things start coming off the rails a little bit here and there, and then that gets everybody's attention again. Okay, well, what's this case about? What's this case about? Why are we having these problems? I thought we fixed this. How come they're popping up again? And that's kind of what starts the engine again to take a look at this stuff.
That's a really good point, Kevin. Change happens when we have a significant enough problem that the people have to come together and solve it. And I don't know anybody that says, "Oh, I wanted to buy a house, but I just couldn't afford the title insurance. It knocked me out of the deal." Doesn't
No,
happen, right? It's not a
no.
problem. The problem is that the federal government for the last 3.5 to 4 years hasn't made any strides toward making housing more affordable. And that was one of their key promises. So we're seeing,
You're
even though I know CFPB has been working on this for some time, right?
And
So
making housing affordable is not by cutting fees. I mean, at the end of the day, and I know that we have all seen this in all the cities that we live in and all the cities where we have families. A house that was $300,000 in 2019 that was right on the edge of really being considered affordable housing is now 500, in some areas maybe $700,000. And unless the average family is earning somewhere in the vicinity of about $190,000 a year, that's just not affordable. I mean,
yeah,
that's what it
yeah.
comes down to.
And I didn't want to drag us into affordable housing because that's a whole nother hour or 2
That's
hour
yeah.
another
show.
show.
Right.
Yeah.
But all I wanted to say is that, Brian, if you had asked the question, what's going to happen in a year, it would have been impossible. 5 years, not so impossible, because what tends to happen with problems like this that are mostly PR facing, in my opinion, it's a big bump in the first year, maybe first year and a half, and then it settles back down. What
Back
Kevin
into
said
commission.
about a lot of people from the real estate business being on Capitol Hill, you know how many more of those are in the state houses all across this nation?
Yeah.
A whole bunch of them. So making a change like this, I think it's just a lot of dust and noise in an
But
election year.
at the end of the day, Rick, what we really have that helps us more than anything is we have very smart attorneys like Loretta who can
There
go
you
and
go.
explain it to
That's
them.
that's why she wins.
Way to work
Awesome.
it. Way to work
Well,
it.
that seems to be a perfect transition. We're going to sneak one more segment in. And if you've seen the show before, I'm sure you've enjoyed this. We're just going to do a quick version here, but we're going to ask our friend, Mr. Breeland, are you kidding me?
Well, so today's version, as you know, if you're a friend of the show and a fan, that we have a little segment here where we kind of try to keep track of America's million and billionaires to make sure life is treating them well, and when they're having tribulations, so that we can sympathize with them a little bit. So I'd like to bring our attention to Chris Pratt and Kathleen Schwarzenegger. Now, for those of you who don't know who these people are, Chris Pratt is a Hollywood actor, and Catherine Schwarzenegger is Maria Shriver and Arnold Schwarzenegger's daughter. And Arnold has even gone on record in a podcast and said that he was very, very happy when Catherine found Chris. So he likes Chris. He's a great son-in-law and all of this. So with all of this family love going around, the Pratts decided to buy a home in the LA part of Brentwood. And for those of you who don't know where Brentwood is, this is also where OJ lived a long time ago. And they found this mid-century house. Now, mid-century in this particular case means the house was built in 1950, and it was by a local famed architect who built it. And so love, I don't know, was it love at first sight or I don't know, but they paid $12.5 million for this property, 3,000 square foot house in Brentwood. So now, as far as celebrity homes in LA go, this is kind of middle of the road cost. It's not unusual for these homes to be 20, 25, 30, 35, $40 million. So 12.5 million is, man, that's like right in the range. So what do Chris and Catherine do immediately? They bring in bulldozers and start tearing it down. And the uproar in LA about the loss of historical architecture. So I would say this house has been sitting there since 1950. If this was really a historical architecture, this would have happened a whole lot faster before they ever got those bulldozers in there. But I will say this, if you pay $12.5 million for the sole luxury of tearing down the house so that you can build a 6,000 square foot house in its place that's 2 stories with a pool and fenced and gated, go for it. Man, if you got that kind of jack, who cares who likes it? Just do it. So
The American dream.
It's the American dream, and Chris and Catherine are living it wildly, and they're not too far from Arnold and not too far from Maria, because they live in separate places now, so they got to get closer to family.
Ooh.
Well, Kevin, we thank you for that. I think we're all going to sleep a little better knowing it, and it's good to know that the Schwarzeneggers and the Pratts are doing well. But we got to go, folks. So I want to thank our special guest and friend of the show, Loretta Salzano. Loretta, will you join us again?
Fun to be with you.
Outstanding. And of course, my thanks as always to Mr. Breeland and Mr. Grant, without whom we would not be much of a podcast. So thanks, gentlemen. Once again, a reminder to our viewers that if you have a topic, a guest, you want to be on the show yourself, just shoot us a note. And on that, a quick story from me on the way out the door. You may not know that, but we call this Three Guys and an iPad because the first time we got together to record, my web camera was busted. So we improvised and we grabbed an old second generation iPad and used the camera on that. Hence, Three Guys and an iPad. That may be about to change. So just the other day, I asked my teenage son to get me a newspaper. And he gave me that special look that only a teenager can give his mother or father. I said, Dad, you're really getting old. Nobody reads newspapers anymore. So he handed me my iPad. Damn, that spider never knew what hit him. Thanks, everybody.